Hey, investor. Now you've made the decision to be investing your money. Very, very good. How will you be investing? It's going to be active investing or passive investing, or it's going to be lump sum investing, or I'm going to do dollar cost averaging, which is also very good. But Lucas, the stock market is so huge. How do I know which stock, fund or bond or cryptocurrency I should be investing my money in? And that is the question that I would like to discuss with you in today's video. I'll give you the 3 requirements all investments should meet in 2021. My name is Lucas, and as an investor from excelwealth.com, I like sharing my ideas on personal finance, investing, and real estate. And if you stay until the end, I'll even share with you how you can get started right away. So Lucas, are you going to tell me which stocks I should buy? Like, how do you know what will fit my investment portfolio? And that's a great question. But this video is not about which specific stock I think you should buy or not. I will give you the 3 requirements your investment portfolio should have at all times if you want to be profitable and making a predictable return. Okay, yes, I know you can't predict the stock market as you can't predict the future, but what you can do is we can manage the risk the moment we look at the right facts. And that brings us to the first requirement of 2021. The investment you make should always be in something, investment that has great growth potential. Now I know people will comment on this, okay? So don't bash on me right away. When we take a look at gold, it's nice and shiny. But gold doesn't have to be growing in price specifically. Because when we take a look at the price of gold, about 10 years ago, gold was being offered at $1,700 per ounce. And currently in 2021, the price of gold is somewhat $1,800 per ounce. Be sure to invest your money in a stock that will keep on growing in the future. Oh, I know, Lucas, I know. Apple is a great company. Oh, how about Microsoft, right? How about those 2 companies? Oh, absolutely. There is one thing though about these 2 companies. These are companies that are established companies, which is totally fine, of course. But if you want to be making great returns, not only for now, but also for the longer future, since, I'm sure you've heard the phrase, buy low and sell high. Now, in these established companies, this theory, is hard to apply. Since the price is already high or the stock has already been split before, and therefore the stock prices will not rise like 10 times each year. It doesn't drop like 10 times a year and rises 10 times a year. I'm sure you've heard other people say, I should have invested in Amazon 20 years ago. Back then, they were cheap and upcoming. And yes, that's right, because 20 years ago, one Amazon stock was only $10 per share. Whereas today, owning one stock of Amazon already costs you over $3,000 per share. So in 20 years' time, this stock has already grown over 300%. And when you compare this to the growth of 1 year from $2,500 to $3,000, it's already 20%. But then again, hey, there's more to gain. When you know that companies like Amazon, in their initial phase, when the first requirement is a growth stock, the second requirement is volatility. Now, volatility, that's a fancy word for how much a stock swings up and down. Now, when you take a look at this image just next to me, you see these black lines. That is considered as low volatility. The swinging is not that much. And the blue lines in this picture is the high volatility. Now, if you're wondering why this is necessary, you might have guessed it. And the guessing is that I think this way I have more opportunities that I can buy low, and sell high. And that's absolutely the case. Now, it's not only the requirement of volatility. The next importance within volatility is that the stock needs to be growing. So this has to have a direct relationship with the first requirement. Grow stock, just because, like if you take a look at gold, it just goes up and down. So that means that the volatility is good. But then again, then becomes day trading because you have to buy cheap, sell low, buy cheap, sell high, buy cheap, sell high. But the necessary thing is for the stock that you always want it to be growing in the end as well. Like, take a look at the image next to me here. Now here you see the stock falling hard, but also rising really strong and peaking very high. And the next time it falls again, it won't drop as far as the previous time. But what you want this to be is that by owning this stock, the overall price should also rise in the end. This will cause you to hit two birds in one stone. Buying low, selling high, but also over time to have value growth in the end as well. And the last requirement in your investment portfolio in 2021 needs to have is called variety. Now, there are multiple things, and one of the things is a variety of sectors. If you have a stock in the technological sector, you have to be sure to add some other sectors as well. For example, healthcare or financial services. But there is also the variety of regions, so locations. You have to be sure to spread out all your investments all over the world. So the moment a crash happens in Asia, your stocks in the US won't be affected. Or how about sustainability? Now, how can we be thinking about our own money and returns, but we should also think about the future, right? Because how sustainable is your stock? How well do they take care of the world? If you're already an investor, maybe it's not a bad idea to take a look at your current portfolio. How well spreaded is your portfolio? Has your portfolio a specific area of expertise? Or does it have a variety of expertises? And since you got until the end, I would like to share with you one more requirement that is a necessity for 2021. But it's a requirement no one really pays attention to this. Like a secret requirement. Well, it's not that much of a secret, but it's something that people tend to forget, and especially in 2021, just because you found a stock that meets all the other three requirements and therefore think, I'm fine, I found a stock that meets all three requirements, I'm totally fine. But the last requirement I always research and apply is the stock should always be outperforming the benchmark. Now, like I mentioned before, if your stock is in the technological sector, what is the benchmark of that sector? And how well is that stock performing compared to the benchmark? Is it doing well, but not outperforming the benchmark? Well, then there's not much to win. But your stock may be growing, and your stock may have a high volatility, and your stock may even have a variety of sectors, but if your stock does not outperform the benchmark, well, then it's just one of the many companies out there, right? And the benchmark is there. There's a reason why there's a benchmark. Because the moment when we think back of Amazon 20 years ago, back in 2000, Amazon had a lot of competition from all those other companies like booksearch.com and jojo.com. We could all have invested in all these companies, but these companies did not outperform the benchmark. And later on, were even purchased, bought up by other companies, or even went bankrupt. So this is why outperforming the benchmark is so important. Now let me ask you again. How does your investment portfolio look like? If you really compare those, your investment portfolio compared to those 4 requirements, I don't think it would be a bad idea to review your portfolio right now. And it's totally free. You don't have to charge anything. I want to thank you for watching. I'll see you in the next video. Happy investing. Bye-bye.